We're tracking shares of Netflix as well this morning. NFLX feeling some pressure after the streaming giant's Q3 revenue guidance fell short of expectations. Shares, though, are up by about 1%. The stock originally dropped 6%, though, on Thursday. The stock is regaining some of those losses, as I mentioned, as investors digested another 8 million plus subscriber gain driven by a strong content slate and benefited from its top line initiatives like its crackdown on password sharing. For more on this, we're joined by John Blackledge, who is the TD Cowen Managing Director and Senior Equity Research Analyst here. Great to have you here with us. So let's talk a little bit about these results. I mean, in terms of where it stacks up against some of your own expectations and what this means for what many have looked at as the best in class, at least on margin performance. Does this further solidify investors' expectations, or is there something else at play here?
Yeah, no, it was definitely a solid quarter, and the guide was good. You know, like you mentioned for 2Q, they added 8 million net member adds. That was a record for 2Q outside of 2Q20, the first year of COVID, and it was above our and consensus estimates of about 5 million. It was kind of within investor expectations. And then, you know, the 2Q revenue was mostly in line, but like you said, they beat on margins again and earnings. And for the full year for 2024, they raised their revenue guide a little bit, and then they raised their op margin guide for the third time since they set it to 26% from 25%. They're looking for essentially five points of margin expansion this year, which is great. All in, we kind of kept our forecast mostly in line, and our price target remains at 775 and maintained by there. We view, you know, there is a good amount of upside from here, you know, despite the stock being up quite a bit this year.
John, what does that upside look like, do you think?
The upside to 770, like what drives the upside?
Yeah, exactly. What's going to be the catalyst here to keep that momentum going in that direction?
Yeah, I mean, it's so global streaming leader, right? Management said last night, we just talked about the big margin expansion this year. They expect margins to continue to rise next year and going forward. Free cash flow rising, stocks trading at about 27 times earnings. We think some of those factors that I just mentioned could drive multiple expansion. And what I'd also point out is on the ad tier, I thought they were pretty bullish on the long term. And also kind of on the near term, right? They expect the ad tier to reach critical scale by next year in all 12 of the AVoD markets. In other words, they're going to get to a certain number of members that are attractive for big brand advertisers in those markets. And to boost those goals, they're retiring the basic tier in US and France, like now, this quarter, like they did in UK and Canada last quarter. And so another driver, certainly in the coming years, is the ad tier. We have ad tier members over 30 million this year, and then rising to over 40 million next year, and kind of growing from there. And just lastly, or you know, somewhat lastly on the ad tier, management has said like, hey, it's a good entry point for consumers in those markets. So it should be a tailwind to member growth in the coming years.
Where would you like to see Netflix spend right now? Is it on sports rights? Is it on more content that they produce, or is it on licensing?
Yeah, great question. So they told us, right, and they confirmed that they're going to spend about 17 billion in cash content spend this year. That's up from about 13 billion-ish last year. And what we're seeing now, the next leg of content evolution for the company is live events, right? And I've covered the stock for a really long time, and if we go back to when they started streaming and they started advancing in making their own content. They first started doing episodic, and then their goal was to launch 5 or 6 episodic shows across different genres. And then it was to launch a film a week, and then it's making content in 40 countries. And now the next leg of the content is live events, to your point. They're gonna stream globally 2 NFL games in the fourth quarter. They have Tyson fight coming up. They had the Brady roast, and so but it's so early. It's just starting, and so this is another leg for them of content, which should be helpful for user engagement.
The infamously censored Brady roast, John. My goodness. I mean, I just wanted to hear some people get booed. But anyway, John Blackledge, TD Cowen Managing Director and Senior Equity Research Analyst. Thanks so much for taking the time.
Thank you.